Hello everyone and welcome to ESG Matters. In this video, we examine Japan's evolving real estate landscape, where land prices have risen for the fourth consecutive year. As of January 2025, the average land price across Japan increased by 2.7% year-on-year, reflecting real estate demand, increasing foreign investment, and the expansion of the semiconductor industry. Urban centers are at the forefront of this growth. Tokyo and Osaka posted some of the most notable gains, driven by demand in both the residential and commercial sectors. Key contributing factors include economic recovery, inflows of foreign capital, and demand for luxury housing and resort properties. Breaking it down by sector, residential land prices increased by an average of 2.1% nationwide. Central Tokyo saw substantial growth, with prices in some areas rising over 10%. This is driven by demand for high-end condominiums, particularly among high-income buyers, although rising construction costs have started to affect sales in suburban regions. Commercial land prices experienced stronger growth, up 3.9% on average, with the Tokyo metropolitan area rising by 8.2%. Leading the increase was the Shibuya district, where land prices rose by 32.7%, attributed to ongoing redevelopment and rising office rents. Tourism-driven demand also played a role, with land prices in Asakusa rising by 29% and in Gifu's Takayama by 28.8%. Industrial land saw some of the most significant increases, particularly in Kumamoto's Ozu town, which rose by 33.3%. This growth is linked to major semiconductor investments, such as TSMC's new facility, illustrating how tech sector expansion is influencing Japan's industrial real estate market. Among Japan's highest land prices, Minato-ku, Akasaka, and Tokyo topped the residential category at 5.9 million Japanese yen per square meter, up 10.3%. In the commercial sector, Tokyo's Ginza 4 Chome recorded 60.5 million Japanese yen per square meter, a rise of 8.6%. Industrial land in Tokyo's Otaku Tokai stood at 823,000 Japanese yen per square meter, up 8%. Experts identify several key factors behind these trends. Return to office momentum is pushing commercial rents higher, while an influx of foreign tourists is boosting demand for hotel and retail properties. Meanwhile, semiconductor facility construction, such as Rapidus in Hokkaido, is driving land demand in surrounding regions, contributing to industrial growth. However, challenges remain. Earthquake-affected areas like Wajima City have seen notable land price declines, and affordability remains a concern, with high construction costs making significant price reductions unlikely. In response, real estate developers are adjusting strategies, targeting households with annual incomes above 20 million Japanese yen and offering smaller units to maintain affordability, such as 1 LDK apartments priced at 4.9 million Japanese yen in Tokyo's Itabashi ward. On a global scale, Japan's land price trends reflect two key ESG dynamics: urban and industrial growth, driven by the semiconductor and tourism sectors, and a focus on quality over quantity in housing, aligning with principles of sustainable urban development. This highlights how real estate trends connect with broader economic and technological developments, particularly greenfield investments in semiconductors and ecotourism. We'd love to hear from you. Would you invest in real estate near major semiconductor hubs like Kumamoto or Hokkaido? How should cities balance rising property values with affordable housing and ESG goals? Comment down below and let us know. Thank you for joining us on ESG Matters. Stay tuned for more stories on how real estate, technology, and sustainability are shaping the future of our cities and industries.